Hello, everybody. I hope that you made it okay through security. Apparently, tomorrow, you're not allowed to bring bags, so I just want to let everybody know that so they don't accidentally come up with bags. But talking about the future of Bitcoin banking and regulation, my name's Eryka Gemma. Online, I'm known as the Bank of Eryka because I thought it was funny in Bank of Eryka, play on words. But really what's more interesting is I have some great panelists who are super experienced in the banking space. So just to start it off, if you guys want to introduce yourself and then your relevancy to this panel.
Good afternoon, Chris Hunter. 5 years ago, I created a open source company that makes Bitcoin banking software called Galway. Next year, 2020, we use that to create the world's first community-owned Bitcoin bank, the Bitcoin Beach Wallet, and now I'm launching a new banking platform in the US called Satoshi.
Caitlin Long came from Wall Street, created Custodia Bank, and we're in a fight with the Fed.
Hailey Lennon, I'm a partner at Rudnick. Before going into private practice, I was in-house at Silvergate Bank and also Coinbase, so I'm excited to be here chatting today.
Colin Crossman, I currently work as the director of the business division for the Wyoming Secretary of State's office.
So people that are actually doing something in the space, we love to see it all the time. Now, the concept of Bitcoin is often associated with being your own bank. So what is the relevancy of these traditional banks to our industry? Caitlin, if you want to answer that first. Just to set the stage, why are we here right now?
Yeah, this industry needs to pay its employees and vendors in fiat currency. We don't really have an active Bitcoin ecosystem yet. Part of the reason for that is, as an appreciating asset, a lot of folks just don't want to transact with Bitcoin. And of course, a lot of folks will recognize the economic theory behind that the good money is hoarded and the bad money is spent.
And if you guys want to understand, just for people that don't know, why banking is so important to our industry?
I would just add that right now, the way like early Bitcoin adopters usually come into the space is through centralized exchanges. And obviously those companies need bank accounts for operational business, but also to have somewhere to put the users' dollars when they come and buy Bitcoin. So it's an important part of the flow of funds.
So one thing we saw historically was under Obama, we saw Operation Chokepoint 1.0, which was people getting their bank accounts shut down if it was associated with Bitcoin. I have a friend who runs a very large Bitcoin ATM company, and he has one entire wall of his office, which is just rejection letters. I shut down your bank account from multiple different banks. Literally, wallpaper, one entire wall. This was Operation Chokepoint 1.0 under Obama. Under Trump, he actually kind of got rid of it, right? This is why we saw Bitcoin go from $750 to $20,000 while he was in office. And then under Biden, Operation Chokepoint 2.0 came out. So now we are under 2.0. Maybe you guys want to explain what 1.0 is, what 2.0 was, and how this affected the industry.
1.0 went after 30 different industries, starting with the payday lenders. It ended up being expanded to industries that the left considers politically incorrect, such as gun manufacturers, gaming, adult entertainment, 30 different industries. And I would say, actually, the Trump administration tried to shut it down, but we had in our industry so much debanking in 2017 during Trump's presidency that's why Wyoming created the Special Purpose Depository Institution charter, because, and it gets to personalis policy, Marty Grunberg, who's currently the head of the FDIC, stayed on as head of the FDIC. There was a big governance fight at the FDIC. He actually overstayed his term at the FDIC, but because Congress couldn't agree to appoint somebody new to replace him, he just stayed. So you had some strange governance things like that, and he was the instigator of Operation Chokepoint 1.0. A lot of folks don't realize there was litigation over that. There was a lawsuit settled by the payday lenders with the FDIC. They agreed to transfer people, to stop doing anything that debanked entire industries, and they're back at it. They are absolutely violating the lawsuit settlement, in my view.
Any other color you guys want to add? I didn't know that, Caitlin.
I think that the crux of this is that banks shouldn't be able to make judgment calls on value or like ideology. It's clear that under FinCEN and OFAC, if there's a violation of law or illicit financing or terrorist financing, like those things can be banned and prevented from going through the financial system. But the idea that like legitimate companies doing legal work, making legal product available, that banks can make judgment calls and shut the bank account down, or as we've seen and we'll talk about, have the actual bank shut down, to me is just something that we shouldn't be okay with.
I would like to add that there's a Supreme Court case now, the NRA case, that came out roughly the same time as the Kentaro banking case, that actually effectively said that the undue influence of governmental pressure on a private institution, in that case it was a insurance company, but that should come to play here if the government is attempting to force banks or other insurance companies to debank or deinsure customers for otherwise legal things because the government doesn't like them.
I just came from a meeting with Rick Grinnell, and he was speaking on behalf of the Trump campaign, talking about his own experience having a bank account closed. He happens to be a gay man, and he said, "Are you closing my bank account because I'm a conservative or because I'm a gay man?" And the next day, this was from Citi, he shared, and the next day he got a phone call from a very senior executive. "No, it's not because you're a gay man, right?" But the point is, like, it was such an incredible story. He was trying to tell all of us that, that the Trump administration understands this. Unfortunately, the comeback to that is Mnuchin's Treasury Department did a lot of this. This is one of the reasons why Wyoming created the Special Purpose Depository Institution Charter, because the FDIC was blocking, and then the OCC under the Treasury Department was blocking it. So there's quite a history, and it unfortunately is bipartisan. And I hope to God that we can break through either in the legal system, or because if he's right and Trump is elected president, that Trump is a lot more sensitive to this issue now, having himself been debanked.
Yeah, no, that's a really good point. And I definitely want to ask you guys, for the benefit of those in the audience, what can they do? What can they particularly do to make sure that these things happen? Because a lot of these things happen right under our noses, but we don't see them. Like, for example, the closure of Signature and Silvergate within a week of each other. We know that both of these banks, they didn't go bankrupt, right? They were just deemed insolvent. So Hailey, with your background in crypto, you started at Silvergate. Can you explain a little bit about what happened when those two banks closed?
Yeah, I mean, there's a few things that happened. I think that there has always been a ton of regulatory and reputational pressure on banks that support this industry. I haven't worked there since about 2014, 2015, but even at that time, we knew that operating a bank that supported these crypto companies, Bitcoin companies, would just increase sort of the bullseye on us. I think that what happened with Silicon Valley Bank, Signature, Silvergate, it was this sort of perfect storm after FTX collapsed and all of that came to light, for regulators to have more justification to point to and say, we told you that this industry was up to no good. There's also other financial things that are different amongst each of the banks. But I do think that, we just saw before coming up here that the FDIC's investigation, Federal Reserve Board's investigation of Silvergate was just dropped. But they're already closed now. They can't continue to support the industry. And so I think there was a quick regulatory pressure that came in. I remember there was even a statement about Signature Bank saying that they posed some risk to the entire financial system if they remained operational. And I remember thinking, is Bitcoin that much of a threat, or that they feel that threatened to say something like that? I mean, if that's the case, then these banks and this industry have a lot more power than I realized in terms of the financial security of the United States. So, I do think that those are great examples. I think highly of the teams that worked behind those banks, and I felt like that was a sad moment for the industry.
Well, let's call it for what it was. It was an assassination in broad daylight, right? So to put it in context, there's two big not-to-fail banks in the U.S., Citi, JP, Wells, Bank of America. There's thousands of smaller banks, and then there's a cadre of mid-sized banks that have $100 billion, $200 billion balance sheets. Four historically served our industry. Metropolitan Commercial Bank self-selected out of the market a year and a half ago when they saw the writing on the wall, and the other three, Silvergate, SVB, Signature, got assassinated. I mean, full stop.
Yeah, this morning I Googled, I was like, if FTX was part of the justification for this and the regulatory pressure, I was trying to research what banks were associated with the Bernie Madoff, and the first thing that came up was JP Morgan and a $400 million fine, but clearly they're still, allowed to operate. And, I would say that when things do go wrong in this industry, it does give regulators more ammunition to point at it. But, we all know that fraud can happen in any industry. That wasn't a crypto or Bitcoin problem that all of a sudden all of these banks should have had to close. And like you said, they were solvent. I mean, they liquidated and were able to pay back all the deposits. So some people further away from the situation will call what happened like a bank run, but that really isn't how I saw it playing out.
Right.
I mean, definitely. You're seeing that we're now a year out from what happened. The Federal Reserve Board just dropped, maybe like an hour ago, the enforcement action against Silvergate Bank, and we kind of still don't know what happened. I mean, I talked to some people who now have moved on to other banks. They've worked at Silvergate, or actually Signature, for 20 years, and they're just like, I didn't work in crypto, but one day they just told us we had to close, and then I was just calling all my clients and saying, we still have your money, don't worry about it. So.
And another crazy thing is that, there are banks that have tried to sort of fill this void, and when you talk to them, they really don't want to be well known. I mean, I remember at Silvergate going to Consensus, and we would turn our badge around because there was so much demand for a bank account. And we never marketed the program. It was just organic. But, these new banks that are trying to get into this space, like to provide, a traditional bank trying to provide these bank accounts, they're like only talking about it word of mouth, very confidentially, because they don't want that bullseye on them. And that's just crazy.
And it occurred to me, the audience, not everybody might know what Operation Chokepoint 1.0 or 2.0 means. So it's not illegal for banks to touch our industry, but whatever is one half notch below that is what's happening. So with the FDIC, the Federal Depository Insurance Corporation, has become weaponized, and we have almost 5,000 banks in this country still, and less than 10 will even talk to a company like mine to provide corporate banking services just to do simple things like run payroll.
And in the mining industry, I know of several small miners that they describe their business to the banks as just a data center or data operations rather than Bitcoin mining, so they don't get debanked.
Is there any investigations or anything that we can support that is going on to look into what happened there?
Well, one thing I will say is that the industry stepped up in a massive way to support Custodia's lawsuit with amicus briefs, and a lot of money went to the very high-powered attorneys who are involved in the amicus briefs in our case, and I want to publicly thank the trade associations for stepping up and doing that. They hired Paul Clement, they hired Don Verrilli. There are now 3 former U.S. Solicitors General and the former Solicitor General of Virginia, bipartisan, by the way, lined up on our side against the Fed in the case. So thank you. That's one thing that the industry has done in a big way.
But what case is that, just so people can know and look into it?
It's Custodia versus Federal Reserve Board of Governors and Federal Reserve Bank of Kansas City. It is on appeal in the 10th Circuit. Thank you. Thank you. Yeah, wow. Thank you.
Very cool. So now we talked about the past a little bit. Let's talk about the current, and then we'll talk about the future. So currently, Colin, I'm going to direct this question at you first. What are some of the ways that the regulators are currently trying to stifle the industry, just specifically?
Well, in addition to the Operation Chokepoint stuff that we talked about, and at a broader level, things like a massive expansion of KYC. This is going to happen unless the 11th Circuit rules in our favor. But there's something called the Corporate Transparency Act that fully goes online January 1st of next year. New businesses have to comply now, but this is effectively removing all privacy from corporate charters. Now, it doesn't mean that the public can get it, but the government will have all of this, and this database will be, the Office of Personnel was hacked. They're going to hack this eventually, of course. But in addition to that, you have what we talked about with miners having to be careful with what they call themselves, with Bitcoin companies and crypto companies having to potentially look for new banks. If this keeps going, it's just going to ramrod down everybody's throats. And if you're not doing the KYC properly, if the banks are saying we're going to KYC you, but we also want to know how you are treating your customers. Is your crypto policy good enough for us, or we're going to kick you out? Things like that are almost certainly coming with the wrong administration.
Well, and it's even the Trump administration. I hate to point out to the libertarians who think that it's only one political party that's doing this, that the Bank Secrecy Act was originated, expanded again, and expanded again, all under Republican presidents, okay, including Trump. The Corporate Transparency Act, and the fact that your bank constantly is asking you for updated information on KYC and updated beneficial owner disclosures is Trump, unfortunately. And again, I hope he comes in, if he is elected, and repeals some of that.
Yeah, one thing I think is that Gary Gensler has a personal vendetta against us because of all you guys who want to troll him online. He probably didn't like us, but then now that everybody trolls him online, he really doesn't like us. So maybe be nicer to him.
Yeah, I think two other things that I've been noticing. I mean, obviously, we've talked, I feel like, for years about the SEC and how they do enforcement actions and don't give clarity. There's also pending legislation supported by Elizabeth Warren that is called DAMLA. Don't make me say what all those letters mean, but it has to do with extending KYC requirements to Bitcoin miners and validators and even wallet providers. And that is pretty much impossible for those companies to even comply with. So it's pretty much a de facto. It's trying to just get rid of the industry in the United States. And there's been a lot of efforts. I mean, you mentioned earlier asking what people can do. I agree, like a lot of the trade associations in this space, including the Blockchain Association and Coin Center, like those organizations do a lot to help educate these regulators. I'm not saying Elizabeth Warren is unaware of what she's doing and what she's trying to do, but when you really explain the technology and that's something, you cannot have regulations that are impossible to comply with. That just doesn't make any sense. And so those conversations and letters to Congress are being sent about DAMLA and some of the other things happening. And I think it's really important to just be kind of following along with that and being supporting the organizations that are trying to help educate on why some of these legislative efforts are just ridiculous.
So DAMLA, another action item for you guys to follow up on and make sure that we protect our industry.
We did succeed in getting Senator Marshall from Kansas to withdraw his sponsorship of that bill, which was announced yesterday. So
things like this, you guys, we got to do
industry. The next one to work on is Senator Lindsey Graham, who is still a co-sponsor of that bill with Elizabeth Warren. So if anybody is from South Carolina, you might want to, in particular, ask him to remove himself, just like Senator Marshall did.
Yeah, very good call to action. Thank you, Caitlin. So if people want to find out how we're being regulated, is there one website we can send people to that gives us a little bit of transparency of the different bills that are coming out against banking in our industry?
Not that I know of.
Follow you on Twitter?
Yeah, I mean, part of the problem, and not to go too far into regulation instead of banking, but part of the problem is that we have 50 states with money transmitter licenses. We have FinCEN, OFAC, IRS, SEC, CFTC, different branches of government. We have this complication between the SEC and CFTC land grab, and Congress not stepping in to sort of level out the playing field. We don't have a prudential regulator, so it's just, it's constant barrage.
It might be really cool if somebody designed an AI to scan all the bills that are filed and tell you which ones affect your industry.
Good idea. Somebody build it, please. There you go.
$1 million idea.
So thinking about what you guys are doing now. So we have some banks that are opening up on the stage. So Caitlin, I'm going to ask you this question first, but what banks are open for business now in Wyoming? What states can people, and what products are available in which states?
The two Wyoming Special Purpose Depository Institution charters that are operating are Custodia and Kraken Bank. Kraken Bank launched in March of this year, were both blocked by the Fed from having Fed master accounts, so we're both going through partner banks. And our partner banks we've publicly disclosed that we've been debanked twice. It's been enormously disruptive and expensive to be debanked, but we continue to fight it, and we're very, very, very grateful to the banks that we have that have stuck with us and have worked with the regulators. They're being harassed to some extent, and it's a long journey. But look, I think I'm so grateful to the bankers who see where the puck is going, not where it is today, and are willing to take the extra regulatory scrutiny to get out ahead of this. Custodia published a blog as well on the SEC granting special exemptions from SAB 121. You all know how I feel about the SEC putting that rule out there to try to kill the industry, and then when it didn't get overturned by Congress because Biden vetoed it and the veto wasn't overturned, the SEC started granting exemptions to SAB 121 to certain large banks. Okay, this is their way of flipping the bird to us. But the banks are coming is what it means, and so the banks are coming to Bitcoin custody. They've been on the sidelines, and now I think they're coming, and I welcome the bankers that are willing to help this industry. Had Silvergate not been willing to take that on in the early days, we wouldn't be as an industry where we are today.
Very true. And how about for you, Chris, with Satoshi Money, how could somebody utilize Satoshi Monies, and where do you do business?
We're not in market yet, soon to be in market come September. We've been building for the last 2 years, but we're launching in 49 states minus New York on day one. New York's a special challenge unto itself, which we can talk about if you want. And then, picking up on Caitlin's point, it's, impossible for us to even consider getting a federal charter anytime soon. And then picking up on something Hailey mentioned, we live in we have a federation of states. We have a single currency, the U.S. dollar, but, money transmission is licensed at the individual state level, which really makes no sense. And so maybe we could get a unified money transmission law at the federal level one day, which would make things much easier as well.
So for Caitlin and Chris, if somebody wanted to utilize your services once they're live, how do they do that exactly? Go to your website?
Yeah, we have a neobank, so we have no physical presence. We're just online and on an app, and go to satoshimoney.com and register.
And for Custodia, since we are an actual bank, we are licensed and operating in 36 states, not Tennessee, so I can't talk to anyone on the ground in Tennessee from a Tennessee company because we are not licensed in Tennessee. But go to our website. We actually have a list of all the states that we are operating in. We are offering Fedwire services as well as money management services, including money market funds and Bitcoin custody right now.
And I bungled our website. It's satoshi.money is the URL. Okay, so you can deposit your dollars or your Bitcoin with us.
Very cool. So we've got about 9 minutes left. Thinking about the future, right? Because we all want to put our energy and our efforts towards a very hopeful future. What is the time horizon that you guys see for banks to be able to function properly when it comes to knowledge capacity, even 24/7 capabilities, which is something we don't see banks have today? What does that time horizon look like?
Stay tuned on that. Stay very, very closely tuned on that.
Any other predictions here?
I feel like that. Although there's still a lot of regulatory pressure, that there's also been a lot of wins for the industry and tides turning, and the Bitcoin spot ETF, things like that is just further evidence that there's an acknowledgement that this industry is not going anywhere. And while there's probably going to be some battles that you all will have to fight, I do think that we're closer there, and I think that. I agree with what Caitlin said. I don't think as an industry we should be thinking of this as a one political side. But I do think that as we have new presidential elections, whoever's elected, that may change the tone of some of this. And I hope that both sides, whoever runs, whoever wins, hears and kind of learns the lessons that Bitcoin's not going anywhere, and they might as well figure out how to pull up a seat to the table.
We have a lot of pending litigation going on. Obviously, there's also some recent cases that have been decided by the Supreme Court that have not been fully digested, like the Loper-Bright decision that removed Chevron deference, the NRA case, Obviously, Caitlin's
Cantero.
case. Cantero. Well, yeah, the Cantero's case is quite interesting. We have the presidential election. We have so much going on. The next 6 months are going to be pretty crazy. And then after that, as all of this kind of settles out, that's when I think we can start seeing things move.
So, thinking about what can be, unburdened by what has been. Okay. I want you guys on the stage to give an idea to your audience just about what is it that we should look forward to, and like maybe in a perfect world, how does a Bitcoin bank operate? Do we do FX where within the bank we can exchange dollars into currencies? Like, what's this big idea that we can look forward to?
Well, I'll just share one aspect of what we're launching with as we go to market here in September. Everything in the world of banking, both traditional banking as well as Bitcoin banking, is binary. So you either trust the bank, and then the bank has your money and you have an IOU, or be your own bank. Good luck, don't screw it up, whether that's cash under your mattress or a self-custodial Bitcoin wallet. So part of the new paradigm that we're introducing, it's not either or. So day one, you'll be able to have what we call our exchange account, where you can trust us with your dollars or your Bitcoin. In the same app, you'll have a Lightning-enabled Bitcoin wallet called our Flash wallet, and with the poke of a button, you can move as much Bitcoin as you want between the two. Bitcoin is a digital bearer instrument, just like cash is a physical bearer instrument, so it's the digital equivalent of taking money in and out of the ATM, and then as soon as possible, whether on Cashew or Fedimint, we'll offer a collaborative custody option as well. So it's no longer this binary either-or thing, but not many people are going to want to be their own bank, even though that's the ethos of Bitcoin. So part of what I want to introduce is giving people the complete flexibility and option along the entire spectrum, from trusting somebody else, trusting yourself, trusting a federation of elders, whatever the case might be best for you.
Sounds interesting. From our perspective, it is taking away the friction of going back and forth between Bitcoin and fiat. And our true north, as I like to say, is that the two systems, fiat and Bitcoin, are going to coexist. They already do. And what we want is to avoid having each system harm the other. It can be done that you have a bridge back and forth between the two systems in a manner that does not harm the other. And unfortunately, because of regulators' decisions, each industry harmed the other back in 2022. And what I mean by that is there were not safe and sound on-off ramps created through the enabling technologies in the traditional banking world. There were all kinds of frictions designed to prevent the ease of going back and forth between the two systems. Licensing is one of them. KYC is another. And even in the ETF world, the decision once the Bitcoin ETF came was in the US to have only cash creates, which means that the creation of the ETF units has to go through the US dollar. You cannot create an ETF unit in the US. You can in Hong Kong, but in the US you cannot go Bitcoin to ETF unit and back again. It has to go Bitcoin to dollar to ETF unit to dollar to Bitcoin again, right? And so the impact of that is, because Bitcoin trades 24/7, 365, and dollars only settle during Fedwire hours, you've got a massive mismatch problem that has now created unsecured credit exposure after hours and on weekends to the banks. And instead of these being small banks that were relatively isolated, that when they failed did not cause a systemic problem as we experienced last year, it's now in the global systemically important banks like JP Morgan and Boney and State Street and Goldman. It's nuts what the regulators did and the way that the SEC forced the cash creates, which is creating this unsecured, unmanageable counterparty credit exposure in the GSIBs at the core of the financial system. This is a problem. I've privately warned the Fed about it. I'm publicly warning the Fed about it here. It's not big enough to cause a systemic issue yet, but it's big enough to cause pain if there is default. We will get to the point of having a CLS bank type structure, and that is what Custodia is working on. There's a real market need for having after-hours U.S. dollar settlement. So stay tuned. That's what I was alluding to earlier. We stay very closely tuned.
Yeah, 24/7. Why not, right? It's 2024. Go ahead, Hailey.
I really appreciate your all's insights on this. I think that one thing I hope for is that, we have this world where sort of the dollars have FDIC insurance, your crypto doesn't. My law firm represented many of the unsecured creditors in BlockFi and Prime Trust, and, people became these unsecured creditors without any form of insurance or even rights to their funds. And so I think as we, continue to develop and think through the appropriate ways to combine the traditional banking world to Bitcoin, and I've always wanted to be able to have my bank account and my Bitcoin balance on the same screen and have this seamless way of doing things. But I think there are some additional insurance type conversations that are going to need to be had, and maybe they're already being had, I don't know, but I think that's an interesting aspect of just the protection that the government ensures that banks and US dollars have is still, will continue to be different than Bitcoin, at least for now.
What should we do as Bitcoiners? I think we need to just keep building. That's it. These guys will fix the banks. It'll turn the banks into a nice layer 2 for us. Just keep building.
Yeah, to Chris's point, the Lightning Network, right? I would love to integrate the Lightning Network. That's not on our near-term roadmap, but yeah.
Keep building, definitely. So if people want to follow you guys, follow your work, and know what we should support or not support, please let us know where to find you. I'll start with you, Colin.
On Twitter, I'm Arcyrus_BTC. That's all I have.
I'm on LinkedIn, although I don't check it as often as I should. Twitter is probably the easiest way. My handle's Hailey Lennon BTC, and just spelled like that with BTC at the end.
CustodiaBank.com. Contact us, info@custodiabank.com if you want to learn more. And I'm on Twitter @CaitlinLong_. And I want to give a shout out to Colin, who also wrote an amicus brief in our lawsuit. Thank you.
Twitter, BTC NYC, and my company's website is satoshi.money.
And I'm on Twitter as Bank of Eryka. So give it up for our panel, you guys. Thanks for all the hard work you do on stage and in the real world, which really matters.